A historic signal just flashed on the charts, one that's only appeared before the biggest bull runs in history. And this time, it's even bigger. Liquidity is pouring in, institutions reloading, and the macro pressure cooker is hitting the breaking point. All the conditions that sparked Bitcoin's last parabolic moves, well, they're back. But here's a twist. This time, they're stacked. If you've been waiting for the moment to pay attention, ladies and gentlemen, this is it. Every signal on my radar is flashing the same message. We're right on the verge of a historic parabolic run, the kind of opportunity that rarely comes twice. And yet, for most people, moments like this are the hardest to act on. It's tempting to second guess, to wait for the perfect entry, or to worry that maybe you've already missed it. But when you're zoomed in, it's easy to get lost in the day-to-day noise and lose sight of the bigger move that's building right now. That's exactly what I want to break down for you today, step by step. There's one rare signal on the charts I want you to see, one that's preceded most of the biggest moves in Bitcoin history. By the end of this episode, you'll see the bigger picture and you'll understand exactly why this moment matters for your crypto strategy, your portfolio, and maybe even, and likely, your entire financial future. Ladies and gentlemen, let's get into it. Let's dive in. This is a very, very exciting show. Happy all-time high to everybody. Even if by the chance that you're watching this and we're still not past all-time highs, we were today, and that is a huge, huge day. So give yourself an applaud. It's exciting. It's exciting. I'm going to show you a couple other things real quick before we dive into the meats and potatoes. I just want to show you a few things right now. Check this out. This is Banter Bubbles, of course, and you can see our market, crypto, is green. It's green across the board. Now let's go over here and look at stocks. Stocks, well, mostly it's Google that's up. Why? Because they just had Google I/O and announced a bunch of really cool things. Everything else is either sideways or down. Our markets don't care about stocks anymore, it seems, and that to me is really great news. And guys, let me show you this real quick. So Bitcoin just surpassed Amazon and is currently now the 5th largest asset on the planet. Gold, we're coming for you. Don't get me wrong, nothing about it, but I just think the gains we're gonna get in Bitcoin are crazy. Apple's coming up next. We just have to push a little bit higher to crush Apple, but it's very exciting moments. Let's start with the macro environment. This is the part most people overlook, but it's the real fuel behind every boom and bust. Recently, Moody's, which is one of the world's most influential credit rating agencies, downgraded the US credit rating. If you've never heard of a credit rating, think of it like a financial report card for a country. It's supposed to measure how trustworthy and stable the government's finances are. And when that rating drops, it usually sends a shockwave through markets. You guys probably heard about it on the news already. Borrowing gets more expensive. Confidence takes a hit. Usually stocks sell off hard and everyone gets really nervous. But this time, the markets barely reacted. The S&P 500, which is the main index for the US stocks, even closed higher after this announcement. On the surface, everything looked calm, but you can't trust the surface. Here's what really is happening underneath. The biggest players in finance, the smart money, the institutions, they started running for the exits. You can see it in the bond market. Fund managers dumped US government bonds at the fastest rate in more than 2 decades. Now, government bonds are supposed to be the safest asset in the world. When big investors start running for the door, it's because they don't trust Uncle Sam to keep things under control. Yields on the 30-year treasury, the interest rates the US government has to pay to borrow money, shot up 5%, the highest since 2023. That's the market demanding extra compensation for extra risk. And if you zoom out even further, the US has stacked up an additional $13 trillion in debt in just 5 years. That means the national debt is now at an absolutely mind-blowing $36 trillion, and it's growing another $2 trillion every single year. All that money has to be paid back with interest at some point. It's not just numbers on a screen. You can feel the stress on the street. More people are falling behind on their car payments than ever before. Auto loan delinquencies are at all-time highs. Over 6.5% of auto borrowers are at least 2 months behind, which tells you regular Americans are feeling the squeeze. And if you look around the globe, the economic uncertainty index is breaking records. Investors everywhere are on the edge, and nobody's sure where the next safe place to put money is supposed to be. So here's a big question we're left with. Even if the safest assets aren't safe anymore, where does capital go? If you want to protect your wealth, or better yet, grow it, where do you look? When all the old rules are breaking down, that's where Bitcoin and crypto come in. Let's shift to what's happening in the world of Bitcoin and why it matters for you. While the old guard in finance is getting spooked, Bitcoin is moving the opposite direction. It just hit the highest daily closing price ever and all-time highs. As we can see on the chart over here, we are currently $109,000 for Bitcoin at the time of recording. It was getting close to 110 there for a second, but we're smashing through all-time highs. And guys, as you can see over here on Bybit, this is the charts. And if you are not aware, or if you guys are following what I'm doing with the sequence, our trading partners, you can see right here, all my trades getting made, stacking Bitcoin for me. You can see the profit and loss. The chart is just up and to the right. And remember, this is stacking Satoshis, as I always say, stacking Bitcoin. So guys, there's a link in the description below. If you're not sure what this is, or if you haven't signed up for a sequence yet, go ahead and check that out, because right now it is doing extremely well for me. 69 wins, 0 losses, accumulating Bitcoin. Okay, now let's get back into it. And remember, that signal I mentioned earlier, here it is. A classic move on the charts that's known for kicking off Bitcoin's biggest bull runs, the golden cross. If you're not familiar, a golden cross is when a short-term moving average crosses above a long-term moving average. Sounds technical, I know, but here's why it matters. This exact pattern has shown up just before every monster Bitcoin rally. Check this out. Since 2024 alone, the last 2 times Bitcoin flashed a golden cross, the price pumped 121% and 68%. And when you zoom out even further, the numbers are even more mind-blowing. Way back in 2017, after a golden cross, Bitcoin went up over 2,200%. And in 2020, a 1,190% run. That's the kind of signal you don't see every day. And it's flashing again right now. Every major trader, fund, and whale on the planet is watching this. It's one of those rare moments in the space where the charts, the news, and the smart money are all lining up. And if you know what to look for, you're ahead of the herd. But even more important is what's happening off the charts. For the first time ever, more Americans now own Bitcoin than they own gold. That's a cultural turning point. Gold has been seen as the ultimate safe haven for centuries. For Bitcoin to flip gold in terms of ownership means people are starting to see digital assets as legitimate stores of value. Cope harder, Peter Schiff. Let's make that real. Imagine you're an executive at a big Wall Street bank. For years, you've watched Bitcoin from the sidelines, maybe and likely even made fun of it. But now your clients are asking for exposure. Jamie Dimon, the CEO of JP Morgan, used to call Bitcoin a fraud. But now, JP Morgan is letting clients buy Bitcoin directly. The narrative has flipped. And it's not just banks. Companies like MicroStrategy are making Bitcoin a core part of their business strategy. MicroStrategy just added another 7,390 Bitcoin to their balance sheet, which now totals a whopping 576,230 Bitcoin. That's not a typo. That's one company. And it's happening around the world too. In Japan, Metaplanet were buying so much Bitcoin that their stock pumped so much in a single day that it had to be halted from overheating due to overwhelming demand. That's an emergency brake the stock exchange only pulls in extreme situations. In Indonesia, DigiAsia raised $100 million to copy the MicroStrategy blueprint, and their stock jumped 90% overnight. Even the biggest asset managers like Susquehanna International Group with $660 billion under management increased their Bitcoin exposure by $300 million last quarter. Bank of America, which has always been conservative, is now stacking even more Bitcoin behind the scenes, according to their latest 13F filings. So what does that all mean for you, if it isn't obvious already? This isn't just hype on Twitter or a bunch of crypto bros making noise anymore. No. The world's biggest investors, companies, and even banks are making Bitcoin a core part of their future. The hyper-institutionalization of Bitcoin is happening right now. But if you think that's wild, just wait until you see what the entire governments are starting to do worldwide. Now we're in a truly uncharted territory. Governments themselves are starting to treat Bitcoin as a strategic reserve. Here's what I mean. In the great state of Texas, for example, they've just passed the Strategic Bitcoin Reserve Bill through both Senate and House with strong bipartisan support. The bill now awaits the governor's signature to officially become law. If it's signed, and it will, Texas will be formally recognizing Bitcoin as a real asset for the state treasury. Incredible. We've been talking about this. Joining Arizona and New Hampshire. Imagine a state putting bars of gold in a vault for a rainy day. Now we're entering an era where states are preparing to do the same with Bitcoin. Then you've got El Salvador. Oh, Bukele, you're the man. They made Bitcoin legal tender, and everyone thought it was a joke. Now, not me, of course, but now they're the ones laughing because their Bitcoin strategy has turned a profit of over $357 million. El Salvador is now a case study for how Bitcoin can change a country's finances. Let's jump in to South Korea. Starting in June 2025, charities and nonprofits will be able to fundraise using crypto. And that means they can accept donations directly without paying bank fees or getting blocked by payment processors. Donations can flow from anywhere in the world instantly and transparently thanks to blockchain. And a side note, ladies and gentlemen, the beautiful thing, almost ironic, poetic, whatever you want to say, this exact use case, donations flowing in using permissionless payment rails like Bitcoin, are the reason why I went from kind of interested in Bitcoin to balls deep down the rabbit hole, all in, was because WikiLeaks, which I believe served a core purpose for human rights and knowledge, they were getting censored across the board from every centralized payment rail in the world. Venmo, PayPal, banks, Western Union, MoneyGram, everybody said, WikiLeaks, because of the pressure from the government, no longer can anybody send you donations. Someone told Julian Assange about Bitcoin, and they started accepting Bitcoin and were able to again resume operations and continue out their heroic mission. Let me know in the comments below, guys, if you think WikiLeaks is a hero or espionage. Crypto isn't just being traded anymore for speculation. It's becoming a tool for social impact and economic inclusion. So when you add it all up, Bitcoin and crypto are stepping into roles that were once reserved for cash, gold, and other real assets. And now they're being used by companies, states, and even entire countries as a strategic piece of the future. But none of this would even be possible without one thing changing first: the regulatory climate. Finally, after me being in this space for 13 years, it's happening. For years, the number one thing holding back big money from getting into crypto was regulation. It wasn't clear if investing or building in the space was safe from a legal standpoint. That's why I left America, but now I'm back. Everyone was worried. Is this going to be banned? Will I get sued? Will I go to jail? That's why most big institutions stayed away. But that is changing. The new chair of the SEC, Paul Atkins, is throwing out the old, aggressive playbook. Instead of punishing companies or trying to catch people off guard, The SEC is now putting out clear, friendly guidelines that say, here is how you can participate. Here's what's allowed, and here's what's not allowed. And I have a feeling that in a week, there's gonna be some major announcements made at Bitcoin Las Vegas. Let me know in the comments, guys, below if you're gonna be there. I'm gonna be there because that's where the biggest people in America, in crypto, are gonna be. You got Hester Peirce of the SEC, head of the crypto task force. You've got Senator Cynthia Lummis, and you've got Paul Atkins. You've got the Trumps are gonna be there. Bo Hines, everybody else. I have a feeling, this is just a gut feeling, there's gonna be some major announcement that has to do with Bitcoin and the United States. Hopefully they announce their plan for the first acquisition of Bitcoin using a budget neutral strategy for America's Bitcoin reserve. How crazy would that be? That's what I keep telling people will be the first real big domino to fall amongst nations when we didn't just keep the Bitcoin that we had, we started buying more. And back to the SEC, several major investigations into crypto firms have quietly been dropped. In fact, almost all of them have. The entire tone is shifting from enforcement to guidance. We know, we've been talking with the SEC. Why does this matter so much? Because when you're an institutional investor, think pension funds, endowments, family offices, you can't touch something at all, no matter how much you want to, unless you know the rules. Nobody's risking billions without clarity and the reputation. Now that the SEC is making things clear, the door is flinging wide open, and all that money sitting on the sidelines can start pouring into markets legally and confidently. But if all that's not crazy enough, this gets even crazier. The biggest catalyst for crypto adoption isn't even coming from within the crypto world itself. It's coming from the US dollar. Let's first explain what stablecoins are, because this is the key to how crypto will truly go mainstream. A stablecoin is a cryptocurrency that's designed to always be worth $1. Think of it like a digital dollar you can send anywhere in the world, like digits on your Venmo or your PayPal, instantly, at any time, without a bank. That's the benefit without Venmo and PayPal, permissionlessly. To make sure these coins are really stable, companies like Circle, which I'm an early investor in, and Tether hold actual US dollars or very safe assets, like US treasuries in reserve. So it's like dollars or dollar-like equivalents. And it's not just happening on the tech side. Regulation is catching up too. In Washington, the Senate is advancing the landmark act, the Genius Act. We talked about it before. This legislation would create a clear path for regulated stablecoins to grow and for tokenized real-world assets to finally go mainstream in the US. That's a massive green light for both innovation and investor protection. And it signals that policymakers are finally getting serious about the digital future of money. Let me put this in perspective for a second. The United States has no choice but to do this. There's over 250 billion dollars of stablecoins issued right now pegged to the US dollar. Most of those are held in short-term treasuries. Who do you think is the biggest buyers of the government's debt? It is stablecoins right now. That is not just a nice upgrade, that is actually fundamentally critical for the strength and stability of the US dollar and the government debt. Right now, more than 1% of all US dollars exist as stablecoins on the blockchain. That might not sound like much, but in the world of currencies, it's a massive milestone. That's hundreds of billions of dollars already living on chain, ready to be deployed into the markets or already deployed in the markets. And here's what's wild. Circle and Tether are buying so many US treasuries to back their stablecoins that they're close to becoming some of the largest holders in the world, right alongside actual massive governments. But the story doesn't stop there. Apps like Robinhood, which you might know for commission-free stock trading, well, they're filing to build a regulated exchange for real-world assets on blockchains like Solana and Base. That's Coinbase's blockchain. That means things like stocks, bonds, or even real estate could be tokenized, and equity turned into digital assets that can be traded 24/7, 365, instantly across borders. It's mind-blowing. Complete upgrade to TradFi. And if you still think this sounds like sci-fi, consider what just happened with Securitize. I am also an early stage investor in Securitize, full disclosure. They took $45 million worth of assets from finance giants like BlackRock and Apollo and tokenized them. That's a giant leap for bridging the old world of finance with the new. The bottom line, tokenization is making legacy finance programmable, accessible, and way more efficient than ever before. So with all of this capital moving on to the blockchain, the next question is, which blockchains are actually capturing the upside? Let's talk about the battle for blockchain supremacy. Solana has been dominating decentralized exchange volumes for 5 weeks in a row. In just 1 week, over 325,000 new tokens were launched on Solana. That's a signal of explosive developer activity. The Alpenglow upgrade, which is in the works, will make Solana even faster, cheaper, and more scalable. But let's make it practical. Why does this even matter? When a blockchain is fast and cheap, you can build applications that people actually use. It's a nice user experience, not just experiments or trading platforms. Yes, there's a lot of junk on Solana. Yes, I made a video yesterday talking about how I think things like LaunchCoin, Believe App, Pump Fund, I believe they're net extractive from the industry. But a lot of real developers are building on Solana. And Chainlink's integration is a big deal too. It's now possible to bring reliable, real-world data like asset prices, sports results, or even weather directly onto Solana's blockchain. That's from Chainlink. That unlocks a whole new wave of decentralized apps and financial products that can't be censored or tampered with. These are really important oracles, and that just means grabbing real-world data and putting it on chain. And it's not just Solana. Sui is making moves too. Microsoft is now integrating Sui's blockchain data along with Bitcoin and Ethereum into their Fabric analytics platform. For a tech giant like Microsoft to include Sui in its enterprise suite is a huge vote of confidence. And the on-chain numbers are catching fire. Sui just hit a new all-time high with 4.1 billion in weekly DEX volume. And in the last 24 hours alone, it saw $83.4 million in stablecoin inflows, outpacing every other chain out there. We've been telling you for months and months and months and months that Sui is gonna be one of the darlings of this run, because that kind of momentum is hard to ignore, and you shouldn't. And it's proof that this ecosystem is gaining serious traction with both builders and capital. We are witnessing a tech arms race, and the chains that move the fastest, scale the best, and attract the most real-world builders and, by default, users of those apps are going to win big. And as all of this innovation explodes, the pace of change only accelerates. Let's turn the spotlight to the altcoin market. Circle, the company behind USDC, is reportedly in talks for a $5 billion sale, with Coinbase and Ripple among the potential buyers. That's real recognition of the value behind stablecoin infrastructure. Meanwhile, Solana and Sui are becoming the blockchains where both developers and big institutions want to build. More innovation attracts more users, which attract more capital, which then attracts even more innovation. If it sounds familiar, it should. It's called a positive feedback loop. It's a virtuous cycle, and it's happening right now. For anyone watching this, understand that the biggest winners of the next bull run are likely being chosen in these moments, when the tech, the talent, and the capital all converge. But even all this, tech, money, and adoption, it can shift in a heartbeat depending on the global political landscape. So let's zoom out and see how geopolitics shape the future of money. Right now, US-China trade tensions are flaring up again. Every time the world's biggest economies clash, the question of which currency is safe comes right back into focus. This is where you start hearing about de-dollarization, the idea that countries are actively looking for alternatives to the US dollar. And guys, coming soon, we have an interview from Andy Shetman, who I've had the best conversation with of anyone I've ever had with about de-dollarization, the BRICS nation, and what that outcome looks like. It was highly educational. I suggest that you guys catch that interview when it comes out. Make sure you subscribe to the channel if you're not already. Hit that bell notification so that you get notifications when I drop new videos, because that one you definitely don't want to miss. The idea that countries are actively looking for alternatives to US dollar for international trade and reserves. This is where Bitcoin's neutrality becomes a huge deal. Bitcoin doesn't belong to any country. It's apolitical. It can't be frozen or printed at will. That makes it incredibly attractive to nations that either want to dodge US sanctions, or simply want more independence from the traditional global financial system. And don't forget how quickly things can change. Trump and Putin recently met, and almost immediately, Russia and Ukraine moved toward ceasefire talks. Somebody get this man a Nobel Peace Prize. These are the kind of behind-the-scenes moves that can flip the global economic order overnight. In a world where the old rules can change in a day, Bitcoin's apolitical, decentralized nature is exactly why both billionaires and nation states are now seeking massive exposure. So let's tie this all together. We are watching macro shockwaves reshuffle what's safe in finance. Institutions and governments are getting FOMO and pushing trillions into crypto. Regulators are moving from hostile to supportive. Technology is evolving at breakneck speed, making blockchains faster and more useful than ever. And global instability is making Bitcoin's neutrality even more valuable with every new headline. So if you've been waiting for a clear signal, ladies and gentlemen, this is it. The window of opportunity is wide open now, but it won't stay that way forever. My advice is simple. Take action. Position yourself on the right side of history. Don't let this be the cycle you missed. Ladies and gentlemen, stay sharp, stack your Satoshis, be bold, and I'll see you on the front lines of the crypto revolution.